Okay, so for question 2, it's a short question. It's 10 marks. So what they ask you is to calculate the depreciation and cumulative depreciation for 2019 and 2020. So they want you to do both years. Now, as soon as you have to do both years, what you have to remember is we have to do the closing transfers specifically for your depreciation account. If you have to do disclosure. Now, in this scenario, because we're only doing the calculations, we don't have to do the closing transfers. But if they ask you for a general ledger account, that would be included. Okay, now if we have to calculate it, we have to calculate it for 2 years. So what it would mean is 2019 would be the opening balances of the 2020s accumulated depreciation. So 2019 accumulated depreciation would then also be the opening balance for 2020. Okay, so that is just something to remember. They tell you to round off to the nearest rand. If they tell you to round off, make sure that you round off, because we do not mark it correct if you show decimals. Okay, and then they tell you to show all your workings. Now, the reason we specifically tell you to show workings is in the event you make a mistake, we can still assign marks to you. Okay, so let's read what information they have given to you. They told you on 31st of August, we purchased the machine on credit for a cost price of 402,500. They tell you it's including VAT. Now, as soon as you see including VAT, you need to remember to remove the VAT when we do a depreciation calculation. The reason for this is because the company would be able to claim the VAT back from SARS. So their vehicle, when you account for it, would be the amount excluding VAT. Okay, so this is what we were taught in the first semester, but for this semester, just remember to remove the VAT component when you do the calculation. They tell you machinery is depreciated over 6 years. Okay, so here they don't give you a percentage, they give you the number of years. Now, as soon as they give you the years, you will divide okay, depending on, we're doing straight line method, so we will divide the cost by the number of years to get our depreciation charge. Okay, so normally we would apply a percentage, but in this scenario, you would divide the number of the years. It's the same principle, it's just recorded differently. Because they tell you it's straight line, we know it's on cost. There is no residual value. If there is a residual value, so I'm just going to make a note here. If you have a residual value, you have to remove it from your cost to calculate the depreciation. Okay, now why do we remove it from the cost? The residual value is the value you say that asset will have left over at the date I am disposing of it. So in the future, when I want to get rid of this car, that is how much money I say I can get for that car. So that's why we remove it, and we will only depreciate that vehicle up to that value. Okay. Because at that date, we say it needs to be worth 20,000, so that is what will be left over. We will depreciate everything up to that value. Okay, so that in this scenario, there is no residual value, so you don't have to deduct it. But if they give it to you in the test, remember to remove it. Okay, and they tell us our year end is 30 June. Okay, so that means if our year end is 30 June, how many months have we had this vehicle for in the first year that we've purchased it? Year one, how many months? Okay, so let's count. So I said if you buy an asset end of the month, you ignore that month. So we only start counting from September. September, October, November, December, January, February, March, April, May, June. So 10 months. Okay, let's see what the guys said online. Okay, so Mabali said it's 10 months. That's correct, Mabali. Okay, so year one is 10 months. So just remember, if it's at the end of the month, you ignore that month and you only start counting in the following month. And then year two would have been 12 months. Okay, now let's go do the calculations for this. Because I want you to calculate it, you can do it in different ways. You can just do the calculations and then indicate what the total is, or how I've done it is I've done it in a table format. Can you guys see my Excel on your screens? The online guys. Let me just share the Excel file then. Okay, so if we take the Excel file, so I've just done it in table format. You can do it in any format. You don't have to do it this way. You could just do the year and then show depreciation, accumulated depreciation. Now, in the first year, we bought that asset in that year. So we wouldn't have had an accumulated depreciation balance because it's the first year that asset is brought in. So that would mean that whatever depreciation we work out for that year is what the accumulated depreciation would also be. So we said the depreciation is straight line method. Our cost was the 402,500, but we have to remove the accumulated depreciation. After that. Okay, so let's quickly do depreciation. Okay, so the cost of the asset is 402,500, and that is in, okay, let me just put the including that here, including that. So now I have to work out the amount excluding that. And how do we work that out? We take the 402,000, we multiply it with 100, which is the amount exclusive of VAT, divide by 115, which is the amount inclusive of VAT. So I'm just going to write the calculation here on the side. So the cost excluding VAT is 350,000. Okay, so that is the cost that I am going to use. Now we said it is straight line method and we said it's over 6 years. So the depreciation would be for 350,000. I'm going to divide it by the 6 years that I have. Okay. And then we said we only use it for 10 months. So I multiplied with 10, divide by 12 to create a monthly amount. Okay, so it's the 350 times, divide 6 years, multiply with 10 over 12. Okay, so that's how you get to the depreciation for 2019. So your depreciation would be that, and because it's the first year we've used the vehicle, the accumulated depreciation would be exactly the same amount. Okay. Then for year two, because it's the straight line method, we do not have to take into account the accumulated depreciation as worked out as yet. So for year two, which is 2020, we would literally just take the 350,000 and divide it by the 6 years to get to 58,333. So instead of 10 over 12, we would multiply with 12 over 12. So you don't have to include that last step where you multiply 12 months over 12 months. It's just to show you how it differs from the other one. So then for year 2, our depreciation amount is the 58,333. And then the accumulated depreciation amount is the opening balance of 48,611. And then we add the current year depreciation charge to get to our new balance, which is 106,944,000. Okay, so what we're testing here is, do you know how to work out depreciation if the asset is not for a full year? If we give you the useful life instead of a ratio or percentage? And then do you understand that accumulated depreciation is all of your depreciation summed up to get to the total depreciation charge, which is basically your accumulated depreciation? Okay, so that is what they wanted for question 2. Okay, do you guys have any questions on depreciation, accumulated depreciation? Okay, so you don't have to write, the question was whether we have to write down both the VAT or the excluding VAT amounts down. You can do it in one. So as long as you show me what the value is excluding VAT, even if you do it as one line item, that is fine. I just did it separately just so that you could follow. Okay, so I've got a question online. Ma'am, can you repeat what you just said about testing accumulated depreciation? Okay, so just to repeat, so what I said is what they were testing in this question is, one, we wanted to see if you can do depreciation if the asset was not used for the entire full year. So in the first scenario, we multiplied it with 10 over 12, so we apportioned it. So that was one thing. Instead of giving you the percentage, the depreciation rate, we gave you the useful life, which was the 6 years, to see if you understand how to do the depreciation calculation using that. And then the accumulated depreciation, that you understand that it is basically a total of all of your depreciation charges for every year summed together. So that's basically what we were testing. And then one thing I missed was the fact that you need to exclude VAT from your cost when you do the depreciation charge. Does that answer your question? Okay, any other questions on depreciation, accumulated depreciation?